Oh my god, I'm getting absolutely battered with hailstone. Hey, it's Tom here from The Wealthy Walker, and welcome back to the channel. Normally I'll be out on a walk and we'll be talking about crypto, investing in general, but as you've probably guessed, it's absolutely pouring it down outside. So I've decided to get some content out there and let's keep talking about all things finance. Of course, I am a new investor, I'm still learning, and today's video we're going to be talking about some of the things that I've learned along the way in my own journey. I'm only 5-6 months in at this time, but already I've learned some really harsh lessons, and if you're new to investing, you may just get a few little insights from this video. Of course, if you are new to the channel, my name is Tom and I'll be talking to you about all things investing, saving, cryptocurrencies, the stock market, and I'll be talking about it from a new beginner's perspective. So if that sounds like something you'd be interested in, of course, click that subscribe button, and yeah, do let us know in the comments, like the video. It really helps with the YouTube algorithm and it's going to help the channel grow and reach more people. Okay, so let's jump straight into today's topic, which is 5 things that I have learned so far as a new investor. The truth is, I've actually learned a lot more than just 5 things in this last 5-6 months, but I believe these are the 5 harshest lessons, and I really believe that it's going to help you guys as new investors on your own journeys. So the first lesson is all about fees. Okay, so when I first got started investing, I was playing around with Moneybox, Vanguard, and I quickly started to realise that, Vanguard was cheaper with fees and whatnot. However, with Vanguard, although it's really cheap, there aren't many options, and I wanted to start investing in individual stocks and shares. So I read some reviews online and I basically discovered Hargreaves Lansdown. Now, with those guys, they are pretty big here in the UK. They've been around a long time, well established. I felt like they had good reviews, so it seemed like a no-brainer to set up an account with them and start investing in stocks and shares through Hargreaves Lansdown. However, although they have a wealth of options and loads of companies are on this site that you can invest in, they did unfortunately ask for a huge fee per trade. Now, me being a beginner, I didn't realise that once I paid this fee, that was it, that money was lost. So I chucked a few £100 on the website and I bought fractions, like a few shares of certain companies that I wanted to invest in at the time. And quickly realised that as soon as I invested in them, I was down a huge percentage of my portfolio because of the fees paid on that trade. And me being an absolute newbie, I bought shares in several companies and I was down a big chunk percentage straight away before I even got started on my investment journey because of those fees. Now, looking into it further, I realised that Hargreaves Lansdown, they do charge smaller fees as you do more trades with them. So it's like an incentive to trade more, you save more. But in reality, when you shop around and look for other investment sites, other platforms, a lot of them are actually free to trade on. And there may be some fees here and there, but they're fractional compared to these set high fees of Hargreaves Lansdown. So guys, if you're new to investing, you're a retail investor, you've not got thousands upon thousands to invest in 1 or 2 companies, I wouldn't use Hargreaves Lansdown. Not financial advice, but I learned the hard way. I paid these silly fees, and now I've got shares on this website where it's going to take years to earn back that kind of money. So of course I did end up moving to trading 2-on-2, so I could buy fractional shares in lots of different companies and not pay really ridiculous fees on them. So lesson number 2, buy the dip. It's really that simple, but when you get started in investing, it's so easy to just fall into the trap of putting all of your cash that you've got on the side straight into investments. It's really exciting, you want to get yourself started in loads of different shares in companies, but if you monitor the charts, you'll realise that there's lots of dips in prices This can happen because of like news articles, fear, uncertainty and doubt in the economy, reports, earnings reports. And so it's really important that when you get started, you don't just chuck all your money straight into one investment or one or two investments, and then you'll notice over time that they'll dip and trough and up and down, and you could have got in at cheaper prices. So a really harsh lesson learned for me was to not buy in at the top, but instead dollar cost average and buy the dip. Okay, lesson number 3, patience is the key. Again, another really simple lesson here, but over this past few months I have fallen for news articles, I have experienced FOMO, where I'm fearing missing out on things. I have been frustrated with lack of growth in certain stocks, and so I have not been patient, and I've ended up selling those stocks, moving into other faster growing areas. And of course I do have high risk tolerance, so I'm willing to gamble on a few speculative stocks. That's just part of my nature. But if I just stay patient, I could have got myself some really good gains through certain companies. For example, I sold out of Nike early on because I was kind of bored with their slow, steady, stagnated growth. And I sold out of Starbucks. I sold out of Google, can you believe it? I love Google, I use Google all the time, but because I was seeing faster growth in other areas, I just thought, well, I've only got fractional shares in Google, maybe I should just sell out whilst I've made a little bit of money at the start and move elsewhere. Of course, earnings come around, they smash their earnings, and Google have gone to bigger and bigger heights and are in much better positions right now than some of the other risky stocks that I invested in. So if you just stay patient with some of your favourite companies, you just believe in them and don't move things around like I did, you might end up getting much bigger gains through staying patient. So yeah, patience is the key. Lesson number 4, dig deep and do your research. Oh my days. Sometimes you've just got to knock yourself on the head and think, what on earth are you doing? For example, I use Binance for some of my crypto holdings. I stake through Binance, and basically a couple of months ago there was some huge news that came out with Binance, some regulatory fears, and I read one article headline that said Binance banned in the UK, and first reaction was, oh my god, I've got loads of coins on there and a lot of them are being staked. So I started reading the article further, and it said that Binance have until Wednesday the following week to respond to some sort of lawsuit against them. So I was like panicking, thinking, oh my god, it's going to take days for my staked coins to be redeemed. So I just naturally jumped on Binance, had a look to see when I could redeem my coins by, and it turned out that I could get them back by Tuesday. So I just clicked redeem, and all my coins, knew I'd be missing out on some of those fractional earnings, and yeah, turns out it was just a load of FUD. You see, if I just dug a little bit deeper, I could have realised that that article was just a fear article. It didn't mean that Binance were being banned as a whole. What it meant was some of their services were being banned in a way, and they had to respond to that. Now also, as I dug a little bit deeper, I realised that Binance has been banned in other countries before, like in Canada, but the Canadians were given almost like 12 months to get their coins out of their services, move them elsewhere. So the coins that I had staked on Binance were safe, and they would have been for months even if they had been fully banned, because the regulators do give you time to move your currencies. The reason why they're bringing in regulators in the first place is to protect customers. So they're not going to punish the customers for being on there, they're going to give you time to move. And if I just dug a little bit deeper, done my research, I would have realised that actually my coins were safe, the fractions that I'd earned were safe, I didn't need to redeem my coins. So yeah, lesson number 4 guys, do your research, dig deep before making any decisions. And lesson number 5, diversification. If there's one thing the stock market has taught me these past few months is if you're just focused on one area and something happens in the news, inflation for example, or jobs reports, or there's some sort of, I don't know, scam to do with that industry, or there's been an earnings report that's affected several companies in that industry, it's really important that you don't have all your eggs in one basket, because I guarantee you all of those companies are going to get hit hard. For example, like right now, I've been mostly all in on crypto. Now that is a huge risk and that's something I'm willing to take, but over time I am going to diversify, because I realise now that if crypto gets hit hard, as it has been in the past few months, everything involved with crypto comes down with it, whether it's mining companies, tech companies related to the industry, obviously the different currencies going to get hit hard. So yeah, again, I will be diversifying, and it's something that I've learned over time is that, you know, at least then if crypto gets hurt, other areas won't. So I'm going to be investing in some all reliable stocks again, like the Nikes and the Googles. I'm also going to be investing in some speculative stocks that are just non-related to crypto. There's also areas like retail that you've got to consider. You know, I'll probably be investing in some gambling related stocks, cannabis stocks, and that way if those certain industries get hit to do with any sort of news, things that are happening in that industry, at least I know that I've got investments in other areas that are relatively safe. So yeah, there it is guys, that's my 5 key lessons: fees, buy the dip, patience, do your research, and diversification. As I said before, if you find this information useful, do hit that like button, and of course, if you found this information useful, do hit the like button, consider subscribing to the channel, and I promise you some of my future videos will be out on walks. It's not going to all be in this room like this today. Thanks for watching, and we'll see you on the next walk.